Welcome, Gwen. Good to see you again. The market's been tough on investors over the past few years. So what's your advice for 2016?
The market has definitely been very tough. My outlook on 2016 is we're not about to rocket up through the sky. We're waiting for the bull market. We're all very excited for that bull market and when it comes. I don't think it's really going to come in spades this year, but there is going to be ways of making money this year. There's short-term plays, there's medium-term plays, and then there's long-term positioning. In the short term, I think there's really good opportunity to make money based on playing the patterns that we know happen in mining, whether it's seasonality in gold, whether it's tax loss opportunities. Then I think there's really good opportunity to make money based on news events within specific equities. So if you follow a mining company, an exploration company, whichever it is, closely enough, and you know that they are working towards this milestone, a pre-feasibility study, a permitting milestone, financing, whatever it might be, if you can gain the confidence that that's going to happen, you can make money on that. Pretium Resources gave us a really good example of that last fall, where you could gain 40% in 6 weeks because they achieved what they said they were going to achieve when they said they were going to achieve it. The market no longer treats news as a liquidity event and stocks go down on it. And then there's also a lot of arbitrage opportunities. This time is really marked by a lot of deal making, right? We've got companies taking each other over, merging, buying assets from each other. Whenever a deal like that is announced, there's some uncertainty about whether it's going to happen. In the stock market, uncertainty translates into a share price discount. If you can become confident that the deal is going to happen, whatever that takes, then that discount becomes an opportunity. Right now, Sunridge Gold is a great example of that. They have an offer from the Chinese company to buy their asset. The market is really discounting that because it's a Chinese company, but if you can gain the confidence that it's going to happen, there's 35% upside available right now. So that's the short term. And then the medium term is more about those stocks that are going to move before the market goes. We just don't know exactly when. So for me, that's uranium, where the fundamentals of supply demand and the contracting cycle are incredibly strong. And that's some specific assets where the de-risking is very advanced and they make sense at today's metal prices. Those assets are going to get taken out. Pipelines are empty for major miners, and so there's going to be deals that happen, and some of those assets are going to get taken out. And then in the long term, of course, 5 years from now, we're going to look back and thank ourselves for taking the time to position in really cream of the crop explorers and developers, people who are establishing project portfolios specifically to take advantage of the bull market. The bull market's going to start surreptitiously. It doesn't ring bells and say, here I am. So people say, well, why position now? It's not going to go today. We don't know when it's going to go, but 5 years from now, you'll thank yourself for having positioned today. So I think there's sort of short, medium, and long-term ways of positioning, of profiting today and in the future. So I'm pretty excited about 2016.
How do you contrast the opportunity between base metals and precious metals?
There's a lot of questions right now. The copper price has struggled significantly. What are some of the most exciting themes in investing right now? Clean energy is one of them. Any kind of energy movement requires copper. Copper is an essential metal for our future, and the copper market is always really tight. We're talking about an 18 million ton annual market that usually has, 200,000 tons of surplus or deficit. A third of it comes from Chile, where issues could arise and derail production quite easily. There's labor concerns down there. There's huge water concerns down there. There is opportunity in copper. I don't think it's this year. Zinc has some very strong supply-demand fundamentals. That's sort of a story we've been waiting for a while. Gold, I'm perhaps of those most optimistic about, simply because I see the US markets and global markets, stock markets in general, struggling. The US bull market ending. When that happens, investors look for two things. They look for safety and they look for value. So safety is gold, and value is where are there some equities that miss the bull market that are undervalued, and mining stands out there. In that context, I like gold, but I am bullish on copper and zinc in a longer time frame. Selectivity is essential. The number of companies operating in this sector has absolutely shrunk down, and so that means those that are surviving today are, at least they've survived this far, so that gives them some credit. But nevertheless, within the group that's out there, there's some companies that have raised a bunch of money in the last 12 months. Those stories have momentum, and momentum really matters. There's brokers who are talking about it because they have clients in it. There's just energy around those stocks, and there's not a lot of energy to go around the industry as a whole, so those stocks are moving. If you can hone in on those stocks, sometimes it's about what the management is doing specifically around financing or permitting or planning. Sometimes it's something more basic, like a currency advantage. Lakeshore Gold has a great currency advantage. That stock's doing really well.
Thanks for that, Gwen. So how can viewers learn more from you?
Thanks for asking. I publish a weekly newsletter for subscribers. It's called the Maven Weekly, and you can sign up for a free trial at my website, which is www.resourcemaven.ca, and just click on the free trial. I'd love to share my thoughts with you.